Hello and welcome back. Paul Gerard from Price Accounting Services. This session we're going to talk about tax deduction labelled D6, which deals with depreciable items. Depreciation's just is a fancy way of saying this is how we're going to write off a cost over a period of time. And the tax office consider what's called the effective life of a specific asset to be the basis for doing that. Now, in its best, let's use a simple example of the work-related laptop computer that you might own if you're in the IT industry. Computers have a very limited life, arguably 2 years, okay? And so what we need to do is determine how much did the asset cost, when was it acquired, and what proportion of the use is work-related. So if it's only used for work-related matters, and that could be at home and work, then it's 100% deductible. If, for example, you might use it for watching YouTube videos like this wonderful one, then you might have a proportion that's private use. So we need to adjust for that. So all we need to know is the cost, the date, and the amount. Private use. Okay, they're the three things we need to know. Now, the other thing that gets forgotten with this is your taxpayer can self-assess the effective life. Now, I know in my instance, I have a laptop, for example, it's lucky if it lasts a year, okay? So it might be to write it off over a year. Now, that doesn't mean you write it off then and there. It means, let's say you buy it in June and you're going to replace it in the next June, we might reflect that over a full year, and so there'll be a smaller deduction this year and a larger deduction to write off the residual next year. The other important thing to remember is, as accountants, we're going to throw a depreciation schedule into your tax return. We need to review that. Does the asset still exist? So let's say we've assumed that, the assumption is that a laptop's going to have a 2-year life, and next year you realise, hey, that laptop stopped working, I bought another one. Well, you better tell us that, because we'll write that one off and start the new one. So we'll enhance that deduction by writing it off. So that's a relevant issue that we need to know about. So hope that guides you with a little bit more about D6, depreciation, effective life, decline in value. You can call it lots of things. At the end of the day, it's still depreciation. It doesn't matter what you call it, okay? So we hope that's been helpful. We'll see you again, see you in another video. Cheers, until then, bye.